Hi, you're watching the daily edition of Your Trades. This is Priyanka Uppal along with me, Sneha. So after a turbulent week globally, turbulent week for the entire globe, all the global markets, the way they behaved last week, today was clearly a rebound trade from across the markets. Indian markets rebounded, Asian markets rebounded, and Europe markets also rebounded. In fact, Nifty shrugged off the weakness and the worries which could possibly come from Hindenburg research report. But then though we ended in red only, Bank Nifty did saw resilience today, and especially the large cap banks, the heavyweights like HDFC Bank, Axis Bank, they were up and running today. So now this week, the whole focus shift to key inflation data figures which has to come from India and US also. But talking about today's trade, gaining sectors. On the gaining side, packs like real estate, metal, IT, these were the gaining sectors. Stocks which were up in trade today, Hero MotoCorp before the numbers, Infosys, JSW Steel, HDFC Bank, Axis Bank, they were the top gainers on the index today. On the losing side, we did saw some of the defensive names like Britannia, Tata Consumer, pharma space like Dr. Reddy and NTPC on the losing side. Broader market also did pretty well today. In fact, some of the stocks did show a good run up today. Voltas, 10% it was up on the solid 31% of beat what we saw, and that will be after 9 consecutive misses. Jubilant Food was 8% up today. Referees upgraded the stock to buy, and hence we saw the traders cheered the stock in a way that it was 8% up today. On the flip side, Sun TV slid around about 10% on weak numbers. Balakrishna lost some 7%. 7% of the cut today coming in on Balakrishna. Energy stocks, ONGC and Oil India, they gained in the last half an hour on the news. And of course, there's an exclusive news also we coming in. Prakash would join us to tell us more on that. And again, day 2, Snehi, we saw again Ola Electric, which was logged in 20% upper circuit, and it was crossed now 100 level mark also. So overall, it was a good recovery trade.
Absolutely. Markets seem to be excited about Ola in particular, like you mentioned, but lots of other stocks did pretty well today. And when we're talking about upper circuits, want to quickly draw your attention to 2 stocks today. Suzlon continues to be in upper circuit for yet another day. What stellar moves coming in on that stock as well? You had Voltas that had hit its circuit and went beyond. In fact, 10.7% gains coming in on just Voltas today on the back of a very stellar set of numbers that came very early in the morning. You had RVNL also doing pretty well, 11% higher. Inox Wind, though, very stellar moves coming in. 20% higher is where that stock was as well. Very good numbers coming in for both Inox Wind and Inox Wind Energy. Very good commentary coming in from the management as well. Very positive outlook. Lots to look forward to when it comes to both of these companies as well. Glenmark Life did well, up 9%. Titagar also joining RVNL from that space, 7.5% higher. But one stock that was up and away today is Amara Raja, right? Because 6% higher is where that stock is. We did see a couple of announcements flowing in over the weekend, and the market frenzy continues around that one. However, on the flip side, let's quickly mark what did not do well other than the ones that Priyanka mentioned. You had Bharat Dynamics, negative brokerage note coming in this morning, 6.3% lower. Aster DM, LIC, Birla Corp, KFin, Honasa. Honasa, despite good set of numbers, 4.6% lower, so that's surprising on that front. But you did have mixed view coming in from brokerages as well on that stock. Adani pack of stocks, all of them in the red, most of them, pardon me, in the red. Adani Green was the one that did pretty well for itself compared to its peers that ended in the green as well. Now on the other side, we do have all eyes on Hero Moto, Apollo Hospitals, as well as yet another company that's going to be coming out with its numbers tomorrow. You have Hindalco, Hero Moto and Apollo Hospitals. Last 3 remaining Nifty companies, numbers will be coming out, so keep a close eye on that as well. But on that note, let's move forward. Let's welcome the technical guest on board today. We have Milind Vasudev, Senior Technical Analyst, Arihant Capital Markets, joining us. Milind, give us a quick sense of the kind of moves you've seen in the market, because if you take a look at the net basis, Nifty has ended rather flat, not much action happening, but over the course of the day, a lot happens and then it simmers down. You know, India VIX also managed to cool off a little bit from the levels we did see coming in. So, 2 questions for you. First up, what's your view on the levels going ahead? What kind of levels are you spotting for the benchmark indices? And second, are you seeing comfort in the large caps as of now, or do you think the broader markets, the small cap and the mid cap indices, are the ones to be keeping an eye out on?
Good afternoon. If you see on the daily chart, if you see the Nifty, it is clearly we are seeing 6 consecutive trading session with narrow range body formation. This clearly reflects that markets are circumspect at higher level. Now going forward, there is a very strong support for Nifty at 24,000, which is the 50-day moving average line. Last time also I was on the show, I said that if we are going to hold the 50-day SMA, and now currently it is rising, and as long as Nifty holds that level of 24,004 levels, we are likely to head higher only. Only on the flip side, only if it breaks the lower level then of 24,000, then we could see the derailment of this uptrend. But at present, we are of the opinion that Nifty is going to head higher, as even if you see the broad indices, if you see the advance decline ratio is also always in the favor of the advancing counter. This shows that there is a broad-based rally going on in the market. And I still feel that, yes, there is a lot of steam remaining in mid and small cap also.
Right, that's on the index level, Milind. Now tell us your recommendation that you would suggest to our viewers.
See, there are two recommendations. One is ONGC, which is currently trading at 300, and last time I saw it was at 340. Keep a stop loss of 320, and the target would be 380 and 400 levels. The second stock is Federal Bank, which is currently trading at 200 levels. One can keep a stop loss of 190 on the higher side. 220 and 230 could be possible in this counter.
All right, Milind, thank you so much for taking the time out joining us and also sharing your views today. Federal Bank as well as, pardon me, Milind's picks are Federal Bank, yes, as well as ONGC coming in. But let's now keep on going with the technicals and take it across to my colleague Shrishti. And Shrishti, you're joining us with two stocks on your technical radar. What are those and what are you spotting on the charts today?
So two counters, on one on the breakout side and the other one on the breakdown side, because indeed the market is giving moves on both sides. And first let's have a look at Federal Bank, because this stock saw a smart recovery from the day's lowest point. If we see, the stock has been in a continuous uptrend, but for today, very interesting candlestick pattern is what the stock has made, because it did drift below its 20-day moving average, but in a day prior, that was on Friday, the stock managed to cross its 20-day moving average. But today, it actually engulfed the previous candle and made a bullish engulfing pattern. The stock was supported by a long build-up as well as managed to cross the 20-day moving average as well. And once again, getting back to its previous highs. So this is the first counter that we wish to highlight on the breakout side. But moving on to the next one, stock where we spotted a breakdown was Astral Limited, because on the charts you will see that the stock was once again seen to be retesting its crucial support of 1950 rupees. The stock has been under tremendous pressure, as you can see, from 2400 rupees back to 1940. But in today's trading session, the stock managed to close the day almost at the day's lowest point. Other than that, now trading below its all key moving averages and retesting its crucial support of 20-day moving average. But for a day where the stock was down and out, we spotted a breakdown, and hence we are flagging this off for you all. So one stock on the breakout and the other one on breakdown. Back to you.
All right, thanks for sharing a combination and highlighting the patterns, the technical pattern also on both the stocks. Srishti, thanks very much. Moving on, though a defensive pack was at the back foot today, and so is our expert who is not very bullish on FMCG today. Anish, co-CIO for equities for ICICI Prudential AMC, is cautious on the FMCG space and believes that the sector is seeing slower growth as because the margins are too high. Let's listen in what exactly he had to say.
FMCG companies are seeing slow growth because their margins are too high and they're not investing enough in the business for growth. So I actually don't subscribe to this rural versus urban that much anyway. I think my also rural partly, is weak because during COVID, right, a lot of people had moved from urban areas to rural areas, and therefore the rural area had been, benefited from the people having moved with their assets and income to rural areas, and some of those might have gone back. I think the rural versus urban will be more balanced. I wouldn't like to take a big skew in terms of rural versus urban. Specifically on FMCG, I'm still cautious.
That's the word coming in from Manish Tawakle of ICICI Prudential AMC and his stance on the entire FMCG space and how he's going to approach the space. But on that note, we'll slip into a short breather on this edition of Your Trades. More to talk about the day that was when we return on the other side. Hi there, welcome back. Still watching Your Trades on ET now. Let's take a look at what the derivatives space has shaped up to be like today. And well, first of all, for the August expiry on the Nifty front, some short build-up being seen. So that's a little bit concerning. Short build-up is being seen on Nifty, and Nifty Bank also absolutely flat actually. That's what the derivative outlook is on that front. So not much happening for Nifty Bank, but well, yeah, slightly negative sentiment being reflected on the Nifty as well. Let's pull up an India Wix, take a look at what that has ended like for the day at 15.87, 15.9 whereabouts. Cooled off significantly from the day's high is where India Wix has closed. 3.5% uptick coming in on that front as well. Now on the active calls, so the 14th August expiry, we did see some call writing being done at 24,400 and 24,500, making 24,500 your next resistance level to watch out for. And on the flip side, on the active put side, some puts were being seen at 24,300 as well as 24,200, making your 24,200 your support level to watch out for. So well, 24,500 on the upside and 24,200 as the support level is the levels that you should be keeping on your radar going ahead.
Alright, so looks like we've almost a major part of the losses that Indian markets saw, they have also recovered. US almost recovered if you see their weekly gains, weekly closure. Now moving on to the big story of the day, that happens to be Voltas. Voltas was on fire today after profit more than doubled in the first quarter. Someet joins in with the complete details on the earnings. Someet.
Well, Voltas reported a very strong set of numbers in the first quarter. The EBITDA number for Voltas, if you see on a consolidated basis, came in at close to 423 crore rupees as against the estimate number of close to 325 crore rupees. A solid 31% beat. But what is more important is that this beat has come in after 9 consecutive quarters of EBITDA miss that the company had reported previously. Now, if you look at the AC division, that segment's EBIT jumped nearly 21% on a sequential basis. Moreover, the revenue growth reported by the AC division was also ahead of its peers. Voltas' AC division saw a revenue growth of nearly 51% on a YOY basis, while that of Lloyd, Blue Star and Amber had reported a growth of anywhere between 44 to 47%, which also indicates that there could have been market share gains for the company in the AC division. Apart from that, it was the profitability in the EMP division which also which also aided the numbers in the first quarter. Now, the EMP division reported profit after 6 consecutive quarters of losses, and this is because of lower provisionings that we had seen in the first quarter and earlier quarter. International business had seen a lot of provisioning, because of which there was continuously reporting losses, but that reduced in the first quarter. And lastly, if you look at the EPC business, there the revenue growth was around 13% on a YOY basis. EBIT margins came in at close to 28%, and it was a steady performance on the back of strong order backlog and disciplined execution effort as per analysts. Now, the company will be holding the conference call. The details of the same are yet to be out, but the key things to watch out for from the conference call would be management commentary on the inventory levels in the AC division. What is their outlook going forward? Any price hikes that they have planned? What is the market share currently that they are looking at? And how is the EMP division's profitability trajectory looking like going forward? Would be important to track from Voltas conference call that would be held sometime today or tomorrow.
Alright, Swami, thanks so much for taking us through that. Voltas, a big winner in today's trade, almost 11% higher is where the stock has closed. But let's shift focus and talk about an ET Now exclusive. We learned from sources that the oil ministry has approached the finance ministry on the possible withdrawal of the windfall gains tax. What's the rationale behind this ask? Let's take it across to my colleague Prakash Priyadarshi, who's joining us with all of those exclusive details. Prakash.
Yes, we are learning from our sources that the Oil Ministry has approached the Ministry of Finance regarding windfall gains tax. We are given to understand that the Oil Ministry has asked for the withdrawal of the windfall gains tax on petroleum products. In fact, several presentations have been made in the Finance Ministry, and the Oil Ministry is now recommending for its immediate withdrawal on back of reduction in crude prices. Crude prices have been below $80 per barrel hovering within a range bound for quite some time. Therefore, Oil Ministry is now requesting for the withdrawal of windfall gains taxes. In fact, It also believes that the crude price is likely to go further down. Along with that, it has also made 3 to 4 rounds of presentation to the Finance Ministry on the impact of windfall gains tax on the investment of oil producers. And the oil ministry is also of the view that the oil companies are not making any windfall gains if the prices are below $80 per.
All right, thanks very much, Prakash, for those details. Moving on, the stock that was buzzing in trade today, that is Amara Raja Batteries, the first gigafactory produce of the newly inaugurated battery pack plant in Telangana will come by the end of 2026. This is what Amara Raja Executive Director had to say. He's the director for new energy business, Vikramaditya Gornani. He also mentioned that phase 1 of the battery pack cell manufacturing facility have been funded by internal accruals, and the company is open to equity, debt, IPO for further fundraise. Let's listen in.
The first gigafactory production at the moment, we're looking at the end of 2026 to come into the market. It's going to be approximately 2 gigawatt hour of NMC capacity, followed shortly thereafter by about 4 to 6 gigawatt hour of LFP. Overall, about 1,500, 2,000 crore, largely going to be covered by internal accruals. Okay. From day one, we're pretty clear that phase 1, let's do internally. Let's not really look at any alternate funding because we think we can do this and that we don't want to really open the books unnecessarily right now. But going forward, it's about almost 10,000 crores of investment. That's more in this next 5 years than we spent in the last 40 years as a group. So the risks are higher, the amounts are higher. There's a lot of options, whether it's equity, debt, IPO. I think everything's on the table, but we'll exercise those options as we get there.
All right, so Amara Raja, big buzzer in today's trading session, but let's now take it across to my colleague Jinay, who's standing by with yet another basket of all the stocks that were buzzing in today's trade. Jinay.
Well, yes, so on the back of earnings, Netco Pharma was buzzing up. Revenue saw an uptick of about 20%, whereas net profit jumped about 59%, coming in at 669 crores. Also, EBITDA was improved. We've seen about 52% jump in EBITDA, whereas EBITDA margins came up with 59% versus 46% year-on-year basis. Moving on, Navneet Education's net profit 14 times jump, 746 crores versus 48 crores. But the thing to note down is there is an exceptional gain of about 600 crores in this. Moving on, RateGain Technologies, flat revenues sequentially, but net profit saw a downtick of about 10%. EBITDA was also down about 8%, coming in at 50 crores. Moving on, Subro's net profit jumped about 158%, coming in at 35 crores versus 14 crores Y-on-Y basis. Also, EBITDA margin saw a good expansion of about 272 basis points. Lastly, NBCC was in focus as company received the construction work order for approximately 720 crores.
All right, Janay, thanks so much for taking us through all of those big buzzers in today's trade. But on that note, it's a goodbye from Priyanka, me, and the entire team that put this show together. Thank you so much for watching.